How to write a business plan exit strategy. First, I'll explain why your exit strategy should be your business plan from day one, especially if you are looking for outside money. Then I'll share with you exactly what needs to be inside your exit plan strategy and why most people get it wrong. And finally, I'll give you the components and the language so that you can write this with confidence. By the end of this video, you'll be able to draft a compelling exit strategy section for your business plan that satisfies investors and lenders. Why does an exit strategy belong in your business plan from day one? That's an important question to ask yourself. Investors and lenders want to know how are they going to get their money back. If your business plan doesn't address an exit, this signifies to investors that you have not looked at the full life cycle of your business. Even if you're bootstrapped, having an exit strategy forces you to build with the end in mind. What investors and lenders are looking for in an exit strategy? They will be looking for a planned exit method, either a strategic sale, an IPO, a merger, a realistic timeline, as well as comparable transactions showing that this is a viable exit plan. They will also want to see that you've considered multiple scenarios. A vague, we'll sell someday, or when the buyer's right, we will sell. That won't cut it with investors and lenders. There are 4 key components to an exit strategy. 1, the intended exit method. 2, the timeline. 3, the target valuation. And 4, the transition plan. You need to be specific here, saying we will sell someday versus we want to sell to a strategic buyer for 7x multiple in 3 years is much more compelling to an investor or to a lender. Make sure to include comparable transactions in the market. That way it proves out the valuations that you want to get. Using confident specific language will be required by investors and lenders. Avoid using hedging language, such as we may sell someday. Reference real transactions if possible. This shows that you've done your research and what you've put on paper is supportable. There are 5 common exit strategy methods that you should consider when you're putting this together. A strategic acquisition, which is the most common for small businesses. A financial or private equity buyout. A management buyout, such as an ESOP or an employee stock option plan. For really high growth companies with a higher revenue, IPO can be considered. And lastly, mergers. For most small to mid-market companies, strategic acquisitions or private equity fundings are the most likely. Choose the most aligns with your business model and growth trajectory. Your exit strategy should be consistent with everything else in your business plan. If you're projecting 30% annual growth and targeting a strategic acquirer, show how that growth will make you an attractive target. If you're building a stable, cash-flowing business, a private equity buyout might be more appropriate. Providing alignment in your exit strategy provides more credibility to you as a seller. So what do you need to do today? If your business plan does not have any exit strategy, get that fixed today. If you do have an exit strategy, update it today. Make sure there's realistic timelines, realistic valuation multiples you want to achieve. Keep it short, 1 to 2 pages. Doesn't need to be too long. Everything we just talked about comes down to one thing: how your business is architected for value. I already made a video where I go through the full framework of finding hidden profit leaks and how to turn them into enterprise value. The reason I want you to go and watch it is because applying that framework is how you maximize the value of your business when you go to exit. Go and watch it now. Here's the link.